Good morning, traders. It is Monday, the 17th of October, 2016. It's 8:02 a.m. Chicago time, 9:02 Eastern. This is another Trader Bite. New week, new chance, new goals. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The key releases for this week, the Eurozone Consumer Price Index has already come out, but we have U.S. uh, industrial production coming out here shortly, as well as Fed Stanley and Fisher. the key day of the week is Thursday, but I'll run through it. Uh, well, why don't you look at your own calendar? If you need a recommendation for a calendar, shoot me a message through futurestrader71.com/contact. There's no sense in me spending time on this. Everybody's got the same calendar. But the key day of the week is going to be Thursday. Wednesday we have the Bank of Canada interest rate decision. Not supposed to be a huge mover, but it could be on the same day we have crude oil and beige book. But Thursday we have the ECB rate decision and press conference, and that's likely to cause a revaluation across the board for indices. So look out for that day. As far as what we expected on um, on Friday, let me pull that up. Friday, I released three hypotheses. Here it is. We had gapped up to 2136.50 by the time the trader bite was going on. So we were above Thursday's low. Thursday, if you recall, Thursday actually broke the one-time framing up on the monthly and put in a lower low at 2107.75. That's a key event. And then it rallied on Thursday once the low was put in. Buyers stepped in just below the last low and pushed the market up to 2132. The next day, it closed with strength. The next day, we opened at 2136.50 or so, and the expectation was a pullback and a bounce right off of the prior day's range to push higher into 2153.75, giving us about 20 points of range. I expected the rush. The anticipation was the rush of bargain shoppers to push us back towards, if not hitting, but towards the prior balance. That started to look pretty good, but it never got the pullback. So we went to Hypo 2. Hypo 2 is saying there's no pullback to the gap zone, and then the market rotates up and starts pushing through to the upside, essentially taking on Hypo 1, testing 2144.50 initially, and then potentially to 53.75. 53.75 is a much higher probability with Hypo 2 given the range stat limitations. And we started to look this way, but in fact, what ended up happening is we moved from Hypo 2 to Hypo 3, which was to keep the gap zone, test up, get almost up to 2144.50 or thereabouts, find its sellers, then rotate down to the prior day's point of control down here at 27 something, 27.50, 27.75. Essentially, it's this pink line right here, and that's really what took place almost on the dot on Friday. So if we look at Friday, here it is, the push to 2143.25. The gap zone remains unfilled right here, so that brings in Hypo 2, a push up to 2143.25. Remember, 44.50 is right above there. It's about where I drew it. That's not intended. Right here. Oops. Right here. And then we started to rotate lower, and then in rotating lower, we started to put in some impulsive moves. This is an impulsive move, a very tight consolidation continuation, which then got another continuation. So not only did we push into the prior day's range, we were unable initially to pull out right here, and then we rotated where to? Right to the point of control plus a tick, right to the close of Friday. 2675 was the target for Hypo 3, and it hit it basically to the dot. A pullback to the mid looked threatening. The risk with the mid is it's likely to be corrective and to start pushing back into the IB. Wasn't aggressive with this mid short here, and it ended up working out in the market closing near lows. With the close near lows on a day like this, so we have an initial upper distribution with 37 being the cutoff, and now we have our point of control below the initial balance and into the prior day's range. So the expectation from Friday's trading is that we expect to continue lower, and we did. We ended up pushing lower into 2116.75. Not sure why the OS is down here. It was actually up there. Okay, 2116.75. The primary expectation for lower on the overnight was to push down into this low volume node, which was 2120.75, and that's exactly where our overnight point of control is. I'll show you what that looks like. So all in all, a fairly methodical day, but the issue with Friday was just not being able to determine which of these hypos is playing out. But once we got the impulsive move down, it was clear that the short side is the side we need to stay on. So here's what happened on the reopen: an immediate sell-off down to 1850, a pullback right to the overnight mid, and then a continuation. And then from there, it looked like it was going to be corrective. It sat sideways for most of the European session, and then we started to get corrective here just now with the point of control beneath us. This looks responsive coming in, so I'm looking for it to test 2130.50 on the open, given the configuration of the Globex session. It traded down and up fairly aggressively overnight. So if we look at what it did on an order flow basis, you could see that there's the open right back here. A very quick drop, selling dominating with the red side of the pie being in control. A very low volume pullback. Of course, this is happening in a vacuum. The Asian session hasn't started yet, and then we have a retest, the expansion move, and then we get this spike. We get the spike on the European market, and then we have been steady up. And if I zoom in a bit, you'll see that most of the volume is going off on the offer, meaning buyers are in control here. You can see these pie charts just dominating with the buy side. So overall, it looks like we're likely to see a continuation into the open higher, and that's my primary hypothesis. So let's pull back for a second. And remember, it's Monday. I'll take a little bit longer. I want to show you what has happened so far. Let's fix this. What has happened so far, and is this the big bear drop correction that a lot of folks keep bringing up? And I just want to put this in perspective. Here's a weekly chart. This is what we've done. This was last week right here. This was last week. This is an all sessions chart, so I'm not filtering out for the day session only. And you can see here, we really haven't, we've had a small pullback. The last major pullback on the overnight is to 2100 and a quarter. We've had a small pullback, and we're still holding steady. So we're still actually in this consolidation zone since July 11th. Whoa, didn't want a triangle. since July 11th, and it hasn't pushed that far. It's got a tremendous amount of support underneath it, which it might push through, and the levels for that are actually uh, below us are actually 2080, 2077, and others, and it's not really. To me, it seems like yes, the market is weak, and I'm seeing weakness across the board. Actually, I'm seeing weakness across the underlying sectors, the five key sectors: infotech, healthcare, financials, consumer discretionary, and industrials. Most of those are in a downtrend, except for infotech. So overall, the market is going through a weak period and is likely to experience more of a pullback at this point because of the one-time framing pushing over. But when we put a profile on this, we see that there's a clear cutoff point right down here in the 2100, the 2108, this thin volume area, and we're not down there yet. If we continue and we push last week's low, then I'm going to be looking for a continuation lower and start targeting 2090, 2082, and 2052, and so on. But right now, it's really sitting in a consolidation. The market's got some jitters, but nothing dramatic has happened yet. If we look at the weekly, what we did last week is we left a gap zone behind. We took the prior week's high right here, and we took the prior week's low in an engulfing week. We've moved the value area lower. We've moved the point of control lower. So price action and value-wise, the market is starting to look weakish. Oops, the market's starting to look weakish, and so uh, it, that looks like, hey, let's sell everything. But still, we are inside. We have not seen a trend down yet. Every time we've been hit with a sell-off day, we've taken it right back. So just temper the noise about how the world's coming to an end soon, and people citing the election and so on. The election is somewhat baked in already. The numbers are clear for what the U.S. election is doing, and we'll see with the debate that's coming up this week. But overall, it's it's not that dramatic. When we look at the monthly, here's what I mean by one-time framing down. So we had this peak month in August, and then we had a lower high in September, and so far we have a lower high in October. This is what's called one-time framing down. We have taken out we have taken out the September low. Actually, we've started one-time framing down in September. We've taken out the September low, so we have a lower high, lower low on the monthly. But overall, the value of October is still higher than September's, and this is likely to chop around. What we want to see, if you're looking for a clear sign of selling, um, what you want to see is a really large impulsive move down that has volume and actually has sustainability. In other words, you would want to see a drop on high volume and high volume with a high range. We're talking about in the 40s, higher than second sigma, and then a small pullback and then continuation. That changes things on a higher time frame. But these drops that then balance for a day and then go lower and then go higher. This is the tradition that we've had for the last 2 years, and I'm not seeing this as all that different. As much as I'm happy to be wrong, because moves to the downside give me as a day trader better opportunities. But to me, it's really not that dramatic. Today, looks like we're already pushing into the prior day's range. The expectation for today is an open auction in or slightly in or out of range, and then the expectation is for a push to 2130.50, a pullback, and then I'm looking for it to start pushing towards the low volume node here at 37 even. That's my primary hypothesis. I expect it to take a break here, uh, even though the market is moving funds to safety, with the bonds leading the pack, but not by much. The bonds are only up 31 basis points, and the euro follows behind with 19 basis points. And on the sell side, crude oil's in the worst position at 62 basis points down. There's nothing dramatic here. There isn't a 1% move across the board. So I'm not expecting to see precipitous selling into today. I expect it to be more of a grind. So that's the primary hypothesis. The secondary hypothesis is to push, find sellers, come out of the prior day's range, pull back, and then start moving towards that overnight low, and then retesting the 21.1050 area again. That's the secondary hypothesis. It's almost like a 60-40 chance that Hypo 1 will take place versus Hypo 2. They're not far off of each other. So that's what I'm expecting for today. Uh, One last thing. I will be on Futures IO tomorrow to complete the last of the series that I'm doing for them. Tomorrow I'll be discussing execution, and the the webinar will take place at 4:30 Eastern. Look for a link on the Twitter feed. I hope you can join, and I'll leave you with that. Good luck, and I'll catch you tomorrow morning and tomorrow afternoon. Take care.